In real estate, closing costs are the fees and expenses that buyers and sellers have to pay when a deal is done, usually during the closing or settling process. These fees are in addition to the price of the property and are needed to finish the sale. Closing costs can vary based on things like the location of the property, the type of transaction, and the exact terms that the buyer and seller agree on. They may include different fees, charges, and costs related to the buy or sale of the property. Here's an example of real estate closing costs. John is buying a $300,000 house. In addition to the buy price, he must pay closing costs. Let's look at some of the most common closing fees that John might face. Fees related to the loan. If John gets a mortgage loan to pay for the buy, he might have to pay fees like origination fees, discount points, credit report fees, appraisal fees, and underwriting fees. The costs of handling and approving the loan are covered by these fees. Title-related fees. John will probably have to pay fees for title insurance, title search, and title exams. These fees make sure that the property has a clean title that can be sold, which protects both the buyer and the lender from ownership or lien problems. Attorney or closing agent fees. In some cases, buyers may hire an attorney or a closing agent to help with the closing process. The fees for these professionals can change, depending on how complicated the transaction is and what services are needed. Fees and taxes from the government. During the close process, some fees and taxes from the government may apply. Some examples are sale taxes, recording fees, and property tax prorations. Prepaid expenses. Buyers may be asked to pay for things like property taxes, homeowners insurance, and interest in advance. These payments make sure that the property is properly insured and that taxes and interest are paid for a certain time. Fees for home inspections. If John wanted a professional home inspection, he would have to pay the inspection fee. This fee pays for a thorough inspection of the property to find any possible issues or problems. It's important to remember that, even though the buyer usually pays most of the closing costs, the seller may also have their own costs, such as fees for real estate commissions, transfer taxes, and any open liens or judgments. As part of the sale deal or contract, the buyer and seller can talk about how the closing costs will be split up. Buyers should look over the expected closing costs that the lender gives them and talk with the seller to figure out who will pay for which costs. Understanding closing costs is important for both buyers and sellers because it lets them plan for the extra costs that come up during a real estate deal. It is best to talk to professionals like real estate agents, lenders, or lawyers to get a complete picture of the closing costs for the deal. Congratulations! You just learned something today from Real Estate World. Don't forget to subscribe for more real estate vocabulary. Thanks for watching.